Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the last Traders Espresso for 2019. So, as I welcome everyone, welcome to this Tuesday's morning session. And as I said, the last trading session for 2019. So, as always, guys, we're going to have a look at the markets, a view the charts. But before we do that, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. So, also, before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website, and specifically our JFD research page, which we update as well on a daily basis. So, yep, I believe you can find a lot of useful stuff here for yourselves. So, feel free to visit us here on jfdbank.com and click on the research page right here on the top. But for now, let's jump into the charts. Now, the first one I want to touch on here, and that's the FTSE100. Now, I talked a lot about the FTSE last week, and basically what I was saying that what we're going to be doing here is we're going to be keeping a close eye on this little short-term upside support line taken from the low of the 17th of December. Now, in a way, looking at this picture now, you can see that we managed to break this upside line, and in a way, this kind of increases the chances of a further slide lower. The only thing is here is that the index is currently, and the cash index is currently trading near its 21 EMA. So basically, very good area of support for now. Let's see if it can actually drop lower. If it stays above the 21 EMA, then well, this could in a way reverse and maybe push back to the highs again. But if it struggles to balance above the 21 EMA here on the 4-hour chart, then there is a likelihood we could see a further move lower. But the fact that it already managed to break this short-term upside support line and the 7,600 level already kind of increases the chances of a further move lower. Like I said, the only obstacle for now, the more significant obstacle for now, is the 21 EMA, where the cash index is currently sat at. Now, we can probably get rid of this line. We no longer need it, and in a way, how we could examine this again here, if we get a push back above the 7,600 level, and maybe even better, a push above the 7,628 zone, just for that extra precaution, then yes, we will aim for this little high here that we had on the 27th of December near the 7,665, or even a little bit higher. But again, don't get me wrong, today is a very short day. It's not a full day for the FTSE. Now, some indices are closed already, so the DAX is closed, Nikkei is closed. That's it. They will only reopen, if I'm not mistaken, on the 6th of January, but please double check that calendar as well. Now, Italy is closed from the European markets, Sweden. So, yeah, guys, it's going to be a short one. So, FTSE is working is open not a full day. The same story with the French CAC. So, keep your eyes on that one, guys. And yep, tomorrow, of course, well, New Year, nothing is open. So, be very careful. Then don't get up trading, but well, for obvious reasons. But anyway, guys, for now, basically looking at this picture here, as I said, it's leaning more towards a bit of a downside, but a bit of that downside could be still seen as a temporary correction. So for now, we're going to keep it short and simple. But again, we need to see a drop below that 21 EMA here on the 4-hour chart before kind of getting even more comfortable with slightly lower areas here. So keep your eyes on this one. Silver now, looking at silver. So yesterday, as we know, the equity market sold off in the US as well, and the safe havens like gold, silver, and some currency safe havens like the yen and the Swiss franc, they've kind of got a boost. Not a strong, not a, maybe a major one, but still got a boost. Still became attractive. And like looking at this chart here on silver, and I talked about silver last week. Basically, what I was saying that yes, in a way, there is a chance for this one to drift further north. The only thing is that probably now we would like to see a push above the 1805 before examining slightly higher levels. So we did get that push. It made its way higher. It traveled a little bit to the upside here near the 18.15 level, maybe just slightly below that. But our main targets still remain here near the 18.22 and the 1833 levels. So keep your eyes on those, guys. It is quite interesting right now on silver here, and in general in gold as well. So let's see if silver can travel to this area. For now, we will remain somewhat bullish. Of course, we do not exclude a possibility, maybe this one falling back down again. But the only thing is that for us to consider slightly lower areas, a drop below the 17.72 level initially, this is what we would be looking for in order to consider a possible slide lower. And this little slide lower could be seen still as a temporary correction, because we are still trading above this upside support line taken from the low of the 9th of December. So keep your eyes on that one, guys. Brent oil now. I haven't looked at this one for quite a while, and you can see that it has moved out of the rising channel that I had drawn here previously. So what I'll do, probably we need to start this one from the beginning, and because the channel was violated, so now the main focus will be, of course, on some key support and resistance levels. So the first one being this one right here near the 69.64, 65 territory, somewhere around here. That's basically the highest point of September. And you can see that the commodity did try to make its way higher yesterday, but kind of hit the 68.38 level and then sold off heavily. So in a way, for now, yes, it still maybe has a bit of a chance to drift higher. The only thing is that probably right now or should I say most likely the commodity is going for a bit of correction here. So from the whole channel idea, what we're going to leave is the lower side of that previously drawn channel. So basically, in other words, we're going to draw this nice upside support line taken from the low of the 3rd of October, and in a way you can see how far the commodity has traveled, and how far it has distanced itself. So in a way, maybe a bit of correction could be nice here to see on Brent oil, and especially if it starts dropping below this key area of support. Let me just put this one on the chart, and that's roughly around the 65.80 zone. So also, which currently coincides with the 100 EMA on the 4-hour chart. So in a way, if this drops below this, then this could be opening nicely the path towards the 200 EMA initially, and then maybe further down. So keep your eyes on this one, guys. For now, let me just put another important area of support here. So this is the level that we're going to be keeping a close eye on as well. That's the 63 mark. But that is of course if we start seeing a drop below the 65.80 level. So it's a very interesting spot right now, guys. Could be quite an interesting trade, but again, be very careful and have your stop loss in place. With the upside, we will take a very cautious and conservative approach and wait for a push above the 68.3840 zone before examining slightly higher levels. And by slightly higher levels, I mean the highest point of September near the 69.64 level. So keep your eyes on this one. AUDUSD. So continues to rally and it's working out nicely. So I've looked at this one previously and basically look at the fantastic rally that we're having here on the AUDUSD. So whoever is trying to short it right now, well, I mean, I wouldn't like to be in your shoes. And you can see that it managed to break this barrier here nicely, the 0.6930 level. I talked about this one last week, and yep, that went out. Well, became wonderful. Let's put it that way. So it broke the level, it broke the barrier, traveled higher, and continues to move to the upside. Now, in order to find a good potential area of resistance for this one, and we have to jump into a daily chart and have a look at this, guys. So looking at daily chart, you can see how well we are moving away from the 200-day EMA here, and the next key area of resistance to keep an eye on is, of course, the highest point of July of this year near the 0.7082 mark. The pair is currently balancing just slightly above the psychological 0.70 level, but don't get me wrong, we may get a bit of a correction here if the 0.70 level holds. Especially probably my suggestion here is to keep an eye on the daily chart, and to be honest, don't try to overtrade on this one. Probably keep it maybe for the new year, and just continue observing the price action here. But for now, you can see that it's just one-way traffic. Yes, it is quite overstretched here, even on the daily chart, but that's why we're saying that we'll keep an eye on the 0.70 level and the psychological 0.70 level today. If the rate closes below this, then there's a good chance to see a correction straight away. But if it closes above, then maybe this could travel a little bit higher here, maybe test one of these support resistance levels, and then retrace back to the downside. But again, for now, it seems that it wants to travel higher, but let's keep an eye on that psychological 0.70 level, and if it travels by any chance back down somehow, then yes, we will aim for that little correction here, where we will target this upside support line taken from the low of this December. So keep your eyes on that one, guys. But on the upside, as I said, the main target for us right now is this 0.7082 level. So let's keep an eye on that one. AUDNZD. Now this is a slightly maybe different story here, but I've looked at this one previously and I've talked about this range that the pair is currently stuck in, and this is roughly between the 1.0494 and the 1.05 level, so, or even actually the 1.0488 level. So for now, we're gonna keep an eye on these two areas here. So the upper side of this range and the lower side of the range. Of course, the rate is currently balancing near the lower end of it, but we need a nice confirmation break here, or even actually ideally we would like to see a daily close. And let me just jump back into a daily chart, a daily close below this level, because you can see that the pair is struggling to even drop and close the daily candle below this area, 1.0494 zone. So we're still keeping an eye on it, but if we do get that drop, and this of course would be seen as a nice opportunity for more sellers to join in, and we could see this one drifting further down. We could start targeting this little spike lower near the 1.0368, but the probably more interesting target for us will be this one right here near the 1.0338 mark. So we'll keep an eye on this one. We'll keep an eye on this level, and then we'll, of course, if that's not enough for the sellers, then yep, further declines are possible. But again, we'll keep it short and simple for now. in terms of the upside with this one, now again, I don't, as you understand, that we need to see a break above this level here, above the 1.0488 level at least, in order to consider higher levels, because this way the rate would be placed back above the 200 EMA here on the 4-hour chart. But in a way, if you don't want to miss out all this territory right here, which to be honest is a little bit of a tricky one, so you could in a way keep an eye on the this little barrier right here near the 1.0424-23 zone, roughly around there. If we do get a push above this, then yes, we will aim for the next potential area of resistance near the 1.0464 mark. And then, yes, if that's not enough, then yep, it could travel further north to test this 1.0488 that I just mentioned. So, again, from the very short-term perspective, yes, the level here, the 1.0424 could be an interesting one to watch, but again, still all this territory here is very tricky for us to get comfortable with examining higher levels. We need to see a push above the 1.0488 or even the 1.05 level, even better, and only then target the downside. But given that it's currently closer to the lower end of this range, somewhat of a range. Now, that's why, guys, there is a possibility we could see a drop lower here and further move to the downside. Now, some of you probably have drawn something like this here as well, which is fair enough as well. The descending triangle pattern here. Now, again, these tend to break to the downside, but given the kind of course, the downside according to the TA books. Now, in this scenario, in this particular scenario, the reason why I'm not talking about this is because the pair is already quite overstretched to the downside. So there could be a possibility maybe for a correction, but again, let's not overcomplicate ourselves. Let's probably just wait for a breakthrough one of our key support and resistance levels, and then we'll aim for the next further directional move. USDCHF. Now, I talked about this one in my Traders Tea Time, and this is what I was talking about, guys. I was aiming for the 0.9679 level, and you can see that had a nice perfect test. So the pair continued to decline. It still has 1 day left in order to either to establish a new low for December, or actually kind of, will be happy with what is achieved here, or should I say the bears should be happy with what they have achieved, and maybe we could see the bulls coming in here and pushing this one for a bit of correction deal. As you can see, the pair is quite overstretched here to the downside, even on this 4-hour chart. So in a way, maybe a bit of correction could be possible. The only problem here is this little level here near the 0.9654, which is quite attractive, and that's the lowest point of August. So in a way, there is still some room for some downside, but there again, a bit of correction could be possible because we are quite overstretched here, and this is the last trading day of this month. But then again, this could result in a further decline, and then maybe it could start off the new year with a nice correction back to the upside. So that's why, guys, for now we're going to remain neutral on this one, and we're just going to continue observing the price action and see how it will end 2019. And the last pair for this session is going to be euro dollar. Now, I talked about this yesterday, especially in my Traders Tea Time, where I've said that it played out the scenario perfectly. It did retrace lower after I've mentioned this in my Traders Espresso yesterday. It did travel lower, rebounded from this 1.1183 and pushed back to the upside here, and managed to climb all the way and test this little territory near the 1.1221 zone. So that's basically the new barrier that we're going to be keeping a close eye on. Again, a bit of correction could be possible. Still, the same kind of level remains for us, the 1.1183, or even the kind of the last resort for the bulls to step in could be somewhere maybe even a little bit lower, near the 1.1175. Now, I do understand that yesterday I was talking about this level here as a potential breakout for the downside. It is still the case. In addition to that, we would like to see a drop below the 21 EMA here on the 4-hour chart, and if we do get a drop below the 1.1175, then yes, this could also place the rate below the 21 EMA, and more sellers could start joining in and driving this one towards this tentative short-term tentative upside support line, taken from the low of the 29th of November. Again, everything's kind of looking quite positive here for the euro dollar. In a way, there is still room for a further move higher. The only thing is that probably now we're going to take a very careful approach here and wait for a push above the 1.1221 zone, which is the high of yesterday, and then aim for slightly higher areas. Excuse me, guys. The main target for us is around the 1.1250, and then we'll just keep it at there. And then we'll reevaluate everything at that time. But again, a bit of correction could be possible given the overstretched situation here on the shorter time frame. Again, the same zone remains as the potential area of support near the 1.1183, from which the pair could rebound nicely and push back to the upside. So that's why, guys, it is a very interesting pair, interesting situation here. Basically, if it starts moving higher straight away, keep your eyes on this, on the high of yesterday near the 1.1221. If we do get a break above that, then yes, we will aim for higher levels. But if it continues to balance around here somewhere and starts, let's say, for example, dropping below today's pivot, which is roughly around the 1.1196 zone, then, well, consider a possible correction, and then be very careful near these two levels here, the 1.1183 and the 1.1175. So let's see how this is going to play out. But for now, we're cautiously bullish on this one, and yep, waiting for the next signal. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my traders tea time, and that's 14:15 GMT, we'll have a look at the markets then. We'll see how everything kind of is closing and how everything's closing the 2019 year. I do understand that a few markets will be closed already, but the US markets will be open, so we'll have a look at those. Or should I say the other way around, the cash index of the US market will be open. So after I finish the video, the markets will open. In a way, if you're not able to join me and my traders tea time later on, then Happy New Year, guys. I hope you have a wonderful year, and we'll see each other in 2020. But for those who are still able to join my traders tea time, yep, I'll see you then, guys, and I'll wish you Happy New Year at that, and then during that video. For now, guys, I hope you have a wonderful trading day, and I'll see you later. Bye bye.